questions to the Minister of Finance. We begin with the questions nominated for priority, and question 7 in the name of Deputy Pearse Doherty.
So, Minister, we just discussed how you're going to continue to push up tax on ordinary families despite them being pushed to the pin of the collar in terms of the cost of living crisis in the form of carbon tax. But now explain to the House why you're not going to allow those vulture funds, those cuckoo funds, to pay any tax on their rental income or to pay any CGT tax. So my question to you is this: are these tax advantages that are available to IREFs and REITs for the purchase of existing stock, or are they just for new stock? Because you've justified these advantages as somehow that they would stimulate housing supply.
Thank you very much, Deputy. And it is important that we do have this discussion inside the context of overall government housing policy, which is providing record levels of state investment for all forms of housing. However, government expenditure alone cannot meet all of the housing needs of our state. Modelling undertaken by my department estimates that approximately €12 billion per annum of development funding will be required to meet the target set out in Housing for All, of which €10 billion will be required from private capital sources. And that is what is at stake here: the role of private capital in leading to the supply of new homes. Much of the residential investment committed to by institutional investors is observed by the level of forward commit transactions. That is, the provision of capital to fund the construction of new dwellings or the agreement of purchase contracts to de-risk a project sufficiently to enable the source of low-cost financing. It is likely that such construction would not occur in the absence of this investment. While it is important to facilitate collective investment through appropriate regimes, it's equally important to ensure that where such investment brings a profit, a fair share of tax is paid. As the Deputy is aware, and as is common for investment funds generally, tax occurs primarily at the level of the investor rather than within the fund. Additionally, in the case of both REITs and Real and IRES, withholding taxes apply to distributions to investors to ensure collection of tax revenues. And in 2019, I made a number of significant amendments to both regimes to ensure the appropriate levels of tax are paid by investors in Irish property. Due to the small number of market participants within the REIT regime and to protect taxpayer confidentiality, Revenue cannot provide data with respect to the residential holding of REITs. However, as they're publicly listed companies, the information, such as annual reports, is publicly available. With regard to the proportion of new units, CBRE estimated the level of forward commit investment by institutional investors in the last year totaled just over €2 billion.
Okay, the Minister didn't answer my question as to whether it applies to the purchase of new and existing stock in his response. But Minister, the housing crisis, as I've said on many occasions, isn't an accident. It's a direct consequences of the policies of your party, of the decisions that you have made and those of your partners in government in the form of Fianna Fáil. It's a result of a decade of underinvestment, resulted in chronic shortage of affordable housing. And this is a fact, undermining our economic competitiveness and damaging living standards. We've seen house prices increase by 14% in the last year, rents up 10%, average rents now €1,500, and institutional investors are forward purchasing, not forward funding, but forward purchasing entire developments to rent out at extortionate prices. And they're paying nothing in corporation tax on the rent that they get. Nothing, zero, zilch, absolutely not a bean. The latest financial stability review published by the Central Bank last year found that the majority of units purchased by these funds in 2020 were existing rather than new stock. So how can the Minister justify these funds enjoying this tax advantage for a purpose that does not stimulate new supply?
So let's be clear, where profit is paid, where tax is paid to those who invest in these regimes. If you are in a REIT, you're subject and liable to 25% dividend withholding tax. If you're in an IREF, investing in an IREF, you're subject to a 20% dividend withholding tax. So that's where the tax is paid. Tax is paid when the person, the company, who is investing in one of these funds gets the money back. It's taxed in exactly the same way in which a pension fund is taxed. So the tax occurs when the income is redistributed to the person, to the company who's investing in it. And yes, the reason why I believe private capital does have a role to play in our country is because it's about building new homes. It's about ensuring new homes are built. And these funds do play a role in new homes, particularly new apartments being built.
So again, the Minister refuses to answer the question because the facts are terrible for the Minister. These funds, which the Minister ensures pays no corporation tax, in some cases with rental income of €61 million, pays no CGT tax when they dispose of their assets, that no other Irish company can enjoy, that no other individual who rents out properties can enjoy. But Minister Paschal Donohoe has created a nice wee sweetheart deal for these IREFs and the REITs to say no. Okay, other landlords will have to pay tax, corporation tax at 25%. Others will have to pay CGT. And yes, if you're a shareholder in those companies, you'll have to also pay tax on the dividends that you get. But for these funds, no tax on the rental income, no tax on CGT, and actually let them snap up the majority of second-hand properties. That is why Gillen Markets told the international investors that current housing policy has benefited both institutions and developers at the expense of individual buyers. That's your housing policy. They went and told them that the aim of the institutions is to maximise its rental income from properties and developers who are also designing apartment blocks to maximise the income for the institutions rather than aiming to meet the needs of society. That's your policy. That is your legacy, Minister.
So let's be clear again that this is a government that is investing €4 billion per year into how we can respond back to the real, to the intense housing needs that we are there. It is the government which, in the aftermath of a pandemic, has seen our policies lead to over 20,000 homes being built last year. It's seen over 30,000 homes now being commenced, and over 35,000 homes receive planning permission. So that's what the effect of our policies have delivered in the aftermath of a pandemic during which the construction sector was closed. And I accept, for many, we're not making enough progress quickly enough. I accept for many, they want to see rents come down quickly. They want to see the price of their home, the price of homes change, so they're able to afford to buy that first home. I accept that. But that's why we have the Help to Buy scheme in, which you're against. It's why we also have the Land Development Agency in place, which you're against.
You can't defend your own policy. On the floor of the Dáil, you cannot even defend your own policy.
I'm well used to this from Deputy Doherty. I said earlier on in the Dáil record, and Deputy Doherty knows this is the case, that where the tax is paid is when the income is distributed from the fund. That's where the tax is liable. It's liable at 20%, it's liable at 25%. That is where the tax is paid. And this is the case with the debate that we had earlier on in climate. You come forward, you peddle dangerous ideas, the concept with regard to climate earlier on, I'll end on this point, that you can make progress without there being difficult decisions.
Would think that it's dangerous to ask cookie funds to pay tax and not fleece people in this market. We shall
the reality that where the tax is paid is where the income is distributed.